Good morning. This is James with 77 Financial Group. You're listening to 15 Minutes of Finance, where in the next 15 minutes, I bet I can get you excited about investing. Let's do it. All right. Happy Sunday, everybody. We are back at it again. It's 5:55 in the morning. Sun's not even fully out yet. But guess what? We're out here. We got stuff to talk about. We have a boring week of news coming up. And anytime there's a boring week of news, it's important to talk about it beforehand, because every time there's a week like this where there's pretty much only one big event, which is CPI information, what ends up happening is that is the week where everybody starts talking about what's going to happen weeks, months, not years really, but weeks and months from now. And that is when stock markets start to bake in the news, or starts to bake in the rumors, right? You guys have heard the saying, and this is our term of the day: buy the rumor, sell the news. All right, buy the rumor, sell the news. This has happened consistently this year. Tariffs happen. Oh, Trump is going to implement tariffs. April 1st happens. Boom, stock market just tanks for a whole month. A couple weeks later, really, Trump says, oh, we're working on a deal with Japan. We're really, really close. Oh, we're working on a deal with China. We're really, really close. Boom, stock market shoots up. Okay, that is a buy the rumor, sell the news sentiment, which is just how people are. Okay, people have FOMO, and they also have the opposite, which is what happened with tariffs, where they don't want to experience the pain, and they also don't want to miss out on the gain, and that is human nature. So we're going to talk about the housing market today, and we're going to talk about what's happening this week and why it's important during these boring weeks to predict what's going to happen with the investments and with the market. Okay, so term of the day, guys: buy the rumor, sell the news. It is human nature. It's not necessarily right or wrong, but it does happen. It's just the way we're built, and markets are absolutely no different. Okay, news today for this week: August inflation data, updates from top tech firms, and earnings from the original meme stock darling among the events that could move markets this week. The first look at August inflation, the Consumer Price Index, will show how price pressures are impacting the economy, with Federal Reserve officials under pressure to cut rates later this month. Investors focused on job data to finish last week, during which the S&P 500 and NASDAQ managed gains while the Dow slipped. Apple is expected to unveil several new iPhone models, while NVIDIA, AMD, Broadcom, and Meta are among the tech firms set to deliver presentations at an influential investors conference. Oracle's quarterly report comes out as the cloud provider has closed several big deals, while Adobe's update will provide a look at AI demand, and GameStop's earnings will show whether momentum remains behind the original meme stock. I mean, come on, the GameStop stuff, I love it. It's just that is amazing content right there. Let's see. The Thursday release of the CPI, Consumer Price Index, will show whether price pressures continue to hover around the current levels in August. The same inflation report showed that prices rose less than expected in July. Federal Reserve officials are broadly expected to make their first interest rate cuts of the year after recent jobs data has shown the weakening in the labor market, and even as inflation continues to impact the economy. The CPI report will be the last major piece of inflation data before the Fed announces its interest rate decisions on September 17th. Mark your calendar, September 17th, okay? Honestly, the market will probably start reacting, I would bet, 5 days before, 5 business days. So September 12th, roughly around there. Apple is expected to unveil the new iPhone 17 at its event on Tuesday, where other models of the phone are likely to be unveiled, including a thin version called the Air, along with other Pro models. Thank God, because I need some new AirPod Pros. My dog keeps chewing them up, guys. Her name's Lady, and she sometimes isn't very ladylike, and she loves AirPods. I wish she would love something a lot less expensive, but that's her toy of choice. Okay, several top tech firms will deliver presentations at the annual Goldman Sachs Communicopia Plus Technology Conference. What a name. Where investors will hear from NVIDIA on Monday, Meta and Broadcom on Tuesday, and Microsoft on Wednesday. Oracle's earnings reports on Tuesday comes as CEO Safra Catz has highlighted the strong start to the fiscal year for the tech giant. Graphics software maker Adobe boosted its full-year outlook after its prior earnings report came in better than expected, but investors were looking to see more from the company's AI offering. GameStop's Tuesday report follows a disappointing quarter for the meme stock after it reported a 17% drop in revenue and announced plans to raise new funding. Okay, so this week, what to pay attention to? We have CPI, that's very, very important. And we have Oracle's earnings. I mean, the tech conference is very important because NVIDIA gets to show off its new stuff, whereas its earnings report last week, as we know, did not get good sentiment. Let me just mention NVIDIA really quickly for you guys because it's important. NVIDIA, their best, that's one of the best stocks in the last 20 years. Their best business opportunity, I would argue, is ahead of them. It's the robot game. Okay, they have these data centers that they're working on that they're training AI. It's not just their stuff in the data centers. It's the other AI companies. It's a lot of these software companies enjoy NVIDIA's partnership and their cooperation and contributions. And so they will use these data centers. So now you have actual consumer direct relationships. Now you have producers and manufacturer relationships. And then you also have the software side of stuff where they're like, we want to get in on NVIDIA. That's the golden child of this era. When we can partner with them, it's great for business. So I expect NVIDIA stock to rise after this week. I assume they're going to talk about some really cool stuff this at the tech symposiums. What did they call it? Cornucopia? That's definitely not what they called it, but Communicopia. Wild choice. Anyways, okay, inflation, unemployment, all this stuff, jobs reports, really, really important. So there's something called the Phillips curve, and it's a graphical image, and essentially it's from way back when. It's this last guy named Phillips. He essentially said that, and this is in like the 70s and 80s, which when they learned this wasn't true. The Phillips curve says that if unemployment goes up, inflation goes down. And if inflation goes up, unemployment goes down. Well, we know that's not true because we have something called stagflation, which happened for pretty much all of the 70s, a whole decade of this, where, in some of the 80s, to be honest, too, where both unemployment and inflation goes up. And when that happens, it's horrible for everybody. You're sort of like just stuck, right? It's like purgatory. You're just like, what am I doing here? Why am I here? So stagflation, very, very important that we don't get into that phase, which is what some people think is possible right now. So I would love to see the Fed's cut rates on the 17th. Expect there to be a lot of volatility between now and then. And yeah, I expect there to be probably another rate cut too before the end of the year. And that is what's going to hopefully drive more money into the market, especially during Christmas season, Thanksgiving, where people are just buying things at stores, Amazon, etc. That is going to push retail up. That's going to push the stock market higher. I'm really expecting that and hoping for that. Okay, I wanted to talk about housing today. So there's a reason for this. My parents are currently selling their house. It's the first house they ever bought. They've lived in it for 25 years, 30 years. We rented a really miserable house in like a bad part of town in Arizona. And then when I was in 5th grade, we bought this house, and this is the house I stayed in. So it's a little emotional, but I was just thinking about how often I talk to clients who love real estate. They love it. And I don't get it. And what I mean by that is when I think of investing, I think of hands off. All I have to do is make a good guesstimation on what are the great companies. That is the work that I have to do. And then you also have emotional work, behavioral finance, like trying not to sell when bad news comes. Remember the plan, remember the strategy. The big thing is not so much a plan, but a strategy. Remember what it is that we're trying to accomplish. When I think of real estate, there are so many things I have to do. I have to have cash on hand in case something happens. I have to have a team because I don't know how to do. I'm not an electrician or a plumber or a roofer. I don't know how to do any of that stuff. So you have to have a team. And then you also have to have a management company if you're going to rent it out. Now you have to pay, now you're looking at, and you have a mortgage. Let me talk about that. Most people aren't buying houses in cash. If you are, you absolutely can do whatever you want because you have the liquidity and net worth to diversify through real estate. But most of these people have mortgages. They have people to pay, and they have to have cash on hand. That is a recipe for exhaustion. And that is the only negative thing I can really think about with real estate as far as my own opinion. When I invest, I don't want to have to do more work. That is kind of the whole point. It's to be able to sit back and not have to do it. Now, if you're young, 20s, early 30s, and you want to do that, you love the idea of building something and having it your own, that's a different conversation. Now, a lot of our clients are, well, some of our clients, we have a very diverse group, but mainly we work with a lot of millennials and then people in retirement, right? It's people who have already built all their money who need income, and then people who are trying to build their net worth. What I'm seeing is that the older people are selling their houses and then buying other houses. Some of them are buying a new house before selling their other house. I want to run through some of this data that I got from Redfin and some of these other Zillow, etc. These are housing stats, okay? So national median existing home price, $442,992. New home, $403,800. That's minus 5.9% year over year. Homes for sale, 2.17 million. That's up 14% from last year. Homes sold, 479,000. That's down 1.5% from last year. Median days on the market, 43 to 58, which is slightly longer than last year, which I think was about 34. Now, this is, new home annualized sale, 652,000. That's down 8.2% year over year. Mortgage rate, 6.7% currently. And it's projected to fall to about 1%, 5.7 by the end of 2025. So let me read all of this again. That's falling new home prices. New home sales are down. Inventory is up. That means people are selling more of their houses. Homes taking longer to sell, 43 to 58 days, that's roughly 10 days longer than in 2024. There's an affordability crisis. Only 74,000 is like the preferred income when thinking about buying a house. There's only 2 states left that you can do that with. Okay, only 2 states. That's pretty crazy. And what are they? That's a good question. Why did I not write that down when I wrote down these stats? Hold on, let me check my notes. So let's see if I can find that for you. Let's see. Only two, Louisiana and West Virginia. I don't think any of us want to live there. No offense. If you live in West Virginia, please listen to the podcast. But no one wants to live in West Virginia. Louisiana? Are you kidding me? Now, I think that's where Forrest Gump lived, and they did have some beautiful, beautiful yards. I will admit that. That was beautiful. But those guys chasing, throwing rocks at him while he was running, he was just trying to run. I don't want to live in Louisiana and deal with that. Anyways, what I'm saying is with the housing situation, the prices are unbelievable. When people tell me, and we just had a conversation with clients the other day, prospective new clients are like, well, we want to be able to buy a house and rent it out. And I'm thinking, why? You're in your 60s. Why do you want more effort? You're responsible for more things. It's just more variables being added to your investments. Now, real estate as a diversification tool, amazing, great, perfect, right? I love real estate as a diversification tool. One day I would love us to have a real estate arm of our business, okay? But I don't know the industry well enough to be able to really do a great job with that. So that's my thought process on that. Now, there is going to be a housing correction within the next 5 to 10 years. And I'll tell you why. Because the people that are selling their houses, the boomers, all right, I hate to say it, that's a negative term, but they are technically that generation. They can afford to not sell their house if the price is not right. Meaning some of them aren't going to drop their price. They'll just say, oh, we'll wait. They already have another house. They do not have to sell their house. Where we, the millennials, want houses, what we'll do is we'll just rent. We'll just keep renting and we'll wait. And that is why I think if you are going to do the real estate investment side, the multifamily industry is huge. I was speaking with, and I won't mention his name, a past NBA player. We sat together sat on a plane next to each other to, where were we going? San Jose? We were going to Oregon. We were going to Portland. And we were just talking about it. And his big investment is a multifamily student rental out near UC Irvine. And he makes like $14,000 a month from that it's never, student housing is one of the best industries to be in. And he's like, dude, this has been my most consistent investment out of all of my decisions. And I think that's incredible. That consistency, he was able to narrow down a niche. He's like, look, I went here. I know the student body. I'm aware of the area. This is going to be a great investment, and it's consistent and dependable. And guess what? It has been. So much so that he's adding on to it, trying to increase it to $22,000 a month in revenue. So I do think the rental space will grow. I think the buying and selling of actual property is going to significantly drop. I don't know what's going to happen. I kind of see a stagflation doesn't necessarily, it's not a term you would use in real estate, but I do see like this hovering pause, what are we doing moment, battle between the prices the boomers want to sell and the prices the millennials are willing to buy at. Because the second the millennials buy in at those prices, there's going to be another gap in home purchases from the generation before them. And then that's going to just drop prices again. It's going to be this constant battle with real estate, I think. Outside of multifamily, it's a dangerous avenue. And I'm hoping that there is a real estate crash, which is selfish of me, but I want to be able to buy a house. I live in San Diego. My rent is $3,400 a month. I have friends in Idaho who their mortgage is $1,800. It's like, what are we doing? Now, I love San Diego, and that's the price you pay for living near the ocean. I get that. But it's just the concept that these houses, it's not a real investment. And what I mean by that is a house will never grow. Well, it is most likely that a house you bought for $110,000 in 1990 is not going to be $7 million in 2040. It will not happen like how it is now, where in 1990 it was 100,000 and now it's 1.2 million. That's not going to happen again because their income, salary, wages, GDP, the economy cannot grow at that rate, and therefore the housing material, the housing industry cannot grow at that rate. Okay, guys, I'm 2 minutes over my time. I'm done. Remember this. Okay, buy the rumor, sell the news. Multifamily housing, if you're going to do real estate, I think is the best bet. And Nvidia is gonna bump. I bet you after this week the price targets rise. I think the price targets are 200 right now. I bet it's going to be 210, 215. Anyways, as always, invest early, invest often. We'll see you next time.